What if I told you the recent crypto decline was caused by something that happened over 20 years ago? Today, we're going to talk about the current curious case of the crypto crash. Lots of alliteration there. Hey guys, welcome back to the Trading Coach Podcast. As always, I'm your host, Akil Stokes. Thanks for joining. Today, we're going to step back from the Forex market. We're going to step back from trading and talk a little bit about investing. So if you're someone that enjoys crypto, this is the perfect podcast for you. Or if you're someone that is curious about investing, kind of what goes into creating ideas to, buy or sell, whatever it may be, this is going to provide some good tips as well. Now, before we get started, if you're looking for more tips, I got a perfect place for you to go to my YouTube channel. I've got long form videos where we're taking big, long technical looks at things. I also have a lot of short, quick tip videos where I'm in and out in less than a minute, giving you some helpful tips that could help you progress along your journey of becoming a consistently profitable trader. So check out my YouTube channel, Akil Stokes, videos, shorts, all types of stuff. So what happened in the crypto market? Well, this past week, we saw a massive plunge in the crypto market. And for this podcast, we're going to specifically talk about Bitcoin, but you saw this happen across the board with a lot of different coins. And the big question that I've been getting is why? Well, there are two major components to the crash. One we're going to dig into now, one we'll kind of talk about a little bit later. But the main one actually started about 20 years ago when the Mt. Gox exchange filed for bankruptcy. So what is Mt. Gox, right? Mt. Gox at the time was, I'm pretty sure it was the largest crypto exchange or Bitcoin exchange in the world. I think like 3/4 of all the Bitcoins were some way moved through it. And in 2011, it was hacked and it lost hundreds of thousands of Bitcoins, or maybe not lost, hundreds of thousands of Bitcoins were stolen from it. And just to kind of give you a monetary perspective, this would have been, I think, a little bit shy of $500 million worth, right? So it was a pretty big deal. And if you were to take that equivalent to these days, it would almost be worth about $50 billion, right? Billion with a B. I'm doing a little kind of Dr. Evil thing with my finger in my mouth. Billion, right? Was it trillion he did? I don't know. It's been a while. I got to rewatch those episodes. Now, remember that number, right? The difference between 500 million and 50 billion, because we're going to revisit that a little bit later and why that's had an effect on the market. But needless to say, this is pretty bad for the company. And the result was it filed for bankruptcy in 2014. Now, unfortunately, I have a little bit of experience with this. So I don't want to call it, I guess you can call it scammed, right? There was one scam that affected me in trading. And I don't want to say I fell for a scam because it wasn't like an internet guy promising to make me money or an email from someone saying that there were prints somewhere and if I give them access to my bank account, they'll send me money as soon as they have access to theirs, right? It wasn't a scam like that, but I was connected to a broker. And I say connected to a broker because I wasn't using this broker specifically, but the introducing broker that I used this broker. Long story short, it ended up that this broker was stealing money. They were falsifying the numbers in the books, and everyone that was involved with it basically lost all their money. Now, years later, after you go through the legal process and stuff like that, you get like a letter, and the letter says, hey, we have settled on blah, 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 blah. You're going to start receiving a repayment for blank amount, blank amount, blank amount. So that's typically how it works. But it is a long process. It doesn't just happen overnight where it's like, oh, this company went bankrupt and you get your money right now. It kind of happens over time and you kind of forget about it. You lose hope, you get depressed, and then you get a letter in the mail and you're like, oh, okay, well, that's good. And remember that for later as well. So we fast forward to 2024, right? Right? And in June, the trustees of the estate of the Mt. Gox, they announced that the crypto repayments would start taking place. Now, there's a good and a bad about these repayments, right? The good is, or I guess we'll start with the bad, right? Because I save the good news for last, make you feel good. The bad news is that because they were only able to receive or recover, about like 15% or so of what was stolen, the victims, they wouldn't be receiving their full allotment of coins. Again, if you've ever been through this, it's kind of, you don't expect to receive anything. So it sounds bad, but it's kind of like something is better than nothing type of deal. The good news, right? So the bad news is they only get 15%. The good news is that because this happened such a long time ago, and because the price of Bitcoin, may have changed over the last 10 years or so, or 20 years or so from when the original incident happened. I don't pay too much attention to crypto, but I think it went up, right? Because of that, even with even with them receiving a fraction amount of their original investment, it's still worth a lot more than their total original balance was at the time. So it's kind of a weird lose-win situation depending on how you want to frame it. So what does this have to do with the crash this past week? So this past week, as I mentioned before, right, the crypto market, again, we're talking about Bitcoin specifically, it crashed, plunged. I don't really like using the word crashed. I get yelled at a lot when I say that. It plunged, right? And the reason for this plunge was due to a massive liquidation, right? Selling, as people started receiving their repayments this past Friday. So this past Friday, people actually started receiving the repayments for what happened all those years ago. And what did most people start doing? Well, most people, when they received their repayments, they started closing out their long positions in the market. And there was some data from CoinGlass that said there was about 250,000 traders, and they liquidated nearly $600 million worth of Bitcoin in the last 24 hours. Now, if you're new to the markets, right? Markets go up and down. They go up and down due to buying and selling pressure, the rate of buys, the rate of sells. That's what pushes price. Imagine it like an auction, right? You're sitting at an auction and someone's selling something, and the more people that bid on it, it pushes the price up quicker. When you don't bid on it, it kind of stays the same, right? And you do vice versa for selling. If you were bidding down on it, I guess you wouldn't do that in an auction, which kills my example. But you guys get what I'm saying, right? The flood of sellers that came into the market much outweighed the buyers that were in the market, and therefore we saw the plunge. Now, why would people sell? This is another question that came up to me a lot. Why would people sell, Akil? You're getting this repayment. It's worth a lot more than what your original investment was, even with it being a fraction of that original investment. Wouldn't you just keep it in the market and hold it forever? And maybe, right? Some people would do that, but again, and this is where my personal experience comes into play, this type of investor is a little bit different than a normal type of investor. And there are three reasons why I think people would sell. One, this is probably the obvious one, they've already profited massively from their original investment. This was basically like, hey, here's a lot of surprise, a lot of money. Like, it's like, you know how you feel when you find like a quarter or $1 in the couch, or like you wear that pair of jeans that you haven't worn in a while. You go into the back pocket and you're like, there's a hundo in there. You're like, oh, hey, there we go. Right. I had this the other day where I lost this $50 bill. Yes, I just keep hundos in the back of my pockets, if you're asking. You don't? No, not you? Okay. Right? So I had to say the day I lost this $50 bill around the house, and I lost it for about a year. And then like we found it, and I like damn near threw a party. I was going crazy. It was just, I don't even know if it was the fact that it was $50 now, and it was 50. It was partially the fact that it was $50. Don't get me wrong. I love money. I am very frugal, but it was just like closure of like me finding something that was lost, and it was bothering me of like where it was at. So one, people were getting this pretty much this free check. They're finding hidden money in their back pocket. Two, a lot of them probably lost trust in investing. Now, my assumption is that a lot of these Bitcoin buyers from back whenever it happened, right? Maybe some of them are actually investors, but if the crypto market taught us anything, it's a lot of just like random people just throwing random money in there. Unfortunately, it's a little bit different now as the market has calmed down, but especially at the time when Bitcoin and crypto started kind of booming, you know how it is. Everyone was asking you, like, should I buy Bitcoin? Should I buy? Right? People were like taking out mortgages. Like, people were just taking money and putting it in there. So a lot of those people don't really have a true investment kind of mindset where it's like, hey, I plan on holding this for the future because of blah, 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 blah. They were just like, throw some money at it, whatever. So they probably don't really believe in their investment in the first place. They're probably also suffering from the fool me once, shame on me, fool me twice, I don't get fooled again, one of those type of deals, right? Where it's like, hey, I was in this situation, I got scammed, I was luckily able to get out of it, and I probably should have lost everything, but I got out of it with money. Like, let's just like, I'm gonna cut my losses, right? It's like in trading, we talk about this all the time with the traders I work with. Let's say work for. I guess I do kind of work for you guys. I do serve you guys, but we talk about kind of active trade management. And I have a rule where, so when you have an order in a trade, right? An order, let's say a take profit order, right? The market, it's not guaranteed that once that price point is hit that you'll be taken out of the market. It has to trigger and your broker has to have time to close it out. So sometimes you'll get these situations where like price tickles your order, it kisses it, right, just a little bit, and you're like, yeah, target's hit, but then like you don't actually get triggered and you're like, right? And there have been times like that where it happens and then the market like reverses and stops you out and you're so pissed off because like you should have had a win and now you took a loss. And there's a rule that I have where it's like, hey, I'll let it kiss me once, right? But the second time it gets down there, right, it's not going to kiss me on the cheek again. I'm going to turn. I'm going to go in for the full tongue tassel, right? Sorry, it's a little too far there. But I'm going to exit manually, even if it wasn't filled, because I'm not going to let what should have been a win get away from me and turn into a loss. Another method is bringing stops down to break even, but I like my money. I want to get out. Please ignore the tongue tussle and tongue tassel thing. I'm going to try to edit that out if I can. Don't tell my wife, okay? Just don't tell my wife. Hope she's not listening. I love you, babe. So anyway, people were feeling like, hey, I got out. I got lucky. Let me take my reward and get out of it. I'm not going to test my luck. Again, gambling is another example that probably would have been better because it wouldn't involve wrestling tongues. Anyway, the third one is people right now. We've gone through a lot since 2011. We've gone through a lot since 2014. And overall, the unfortunate truth is that a lot of people are in a much rougher and tougher financial situation than they were back then. Perhaps back then they were in a very good situation. They had money, they had spare money that they can invest in the market and have some fun with and take some risk with. A lot of things have changed and a lot of people are struggling and finances are tighter for a lot of people. Stuff costs a lot more. This is like a lifeline. It is a chance to get out of a bad spot. Whether maybe you have a loan that needs to be repaid. Maybe you have a bill that is close to being collected. This is it's a birthday present, a Christmas gift of money that you can use to better your life. So you're going to cash it out and take it, right? And again, I'm sure there are some people that are kind of like, hey, it was supposed to be lost, this is free money, I'll keep it in. But I think the majority of people are trying to get out. And if I remember the numbers correctly, out of the, what was it? It was like 600 million that was liquidated. I think like 550 million of those liquidations were people that were in long positions, so people that were buying it. So I think a lot of people are in that situation. Now, to add to all that, right, on a side note, apparently the German government also sees, there we go, about 50K worth of Bitcoin, or 50K worth of Bitcoins, 50,000 Bitcoins from some type of pirate film or movie thing. I don't know the details. And they decided to sell about 175 million worth of Bitcoin on Thursday as well. So just add to the fire. Perhaps, right, we talk about insider trading. Perhaps they knew this was coming and said, let's cash out before the price gets cheaper. And you know how it all goes. So with all that being said, the question is, why should anyone be interested in buying? And I've got a few reasons for you, actually. Now, full disclosure, I'm not a crypto guy. I'm not a fan of crypto. I'm not a fan of Bitcoin from a fundamental perspective, meaning it's just not something I'm interested in investing in for personal reasons, I won't get into that here. So this is not investment advice. This is not saying what I'm doing. I'm speaking to the people who have an interest in Bitcoin. I'm speaking to the people that have an interest in crypto, and why this could be looked at as a good opportunity. If you don't have interest in crypto, you shouldn't be looking to buy something you're not interested or something you don't believe in anyway. So this shouldn't affect you. But there are some reasons, right? So if we go back to some recent podcasts I did, right? I did 2 podcasts, I think this year on Bitcoin. I just looked these up the other day. Episode 923, I believe. We spoke about the introduction of the spot Bitcoin ETF. This should have been January, because that's when it happened. And in 962, this would have been April, we talked about the latest Bitcoin, I can't say the word, halving event. I struggled with it back then, now it's bringing back memories. Halving event, right? You're cutting something in half. Halving, whatever you want to say it, right? Don't correct me in the comments, please don't. I know it's bad. But anyway, for me, long story short, and feel free to go back and listen to those episodes for more delicious details, right? But for me, the Bitcoin ETF was a big positive, and I thought it would cause a rally in the coin. And since then, it went up about 80%. You're welcome. And in 962, I spoke about the halving event as well, which happened in April. And historically, here's what happens with halving events. I gotta stop saying this word. Historically, and the market has always rallied, not necessarily right away, but it's always been positive for the next 12 to 18 months, right, after these type events. Now, this event happened back in April, which would put the end of this 12 to 18 month cycle in end of first quarter to second quarter 2025. So long story short, right, where there's still a lot of time, especially for someone that's following the cycle, there's still a lot of time for Bitcoin to recover and kind of finish out this rallying cycle. And despite the rises in Bitcoin, since Akil called it early January with episode 923 of the Trading Coach podcast, where I told you that the spot ETF Bitcoin would be a positive, just saying. Since April, we're actually trading about 10% or so lower than the price we're at when we're halving, right? So this is actually a little bit of a discount. Plus, this wasn't a surprise event. If for those who follow crypto and for those who follow Bitcoin, you knew this was happening, right? This wasn't a surprise. This was on your fundamental radar, where you knew this event had happened. You knew these repayments were happening. And then you were told when they were going to happen. So this is also kind of, you think about a big storm cloud lurking over the crypto market. This is the rain finally starting to fall from that storm cloud. And once this storm cloud's out of the way, it's a big weight taken off the shoulder, because you would assume that this would have a negative effect. So that's actually a positive as well, that I think the repayments are going to happen between June and July. So you can expect kind of the liquidation to continue until the repayments are done, if the trend kind of continues with people just getting out of the money. So you can actually expect a little bit of a lower push on Bitcoin. And then once this black cloud is out the way, once that is done, you're going to have a lot of sellers that are out the market. You would think that price is going to be a lot cheaper. And if you're an investor, cheaper is better, as long as nothing about your long-term fundamental outlook has changed. So this can actually be a very good opportunity for you. Speaking of opportunities, if you get the chance, head over to the YouTube channel. I may do a follow-up on this podcast, actually looking at the technicals of Bitcoin. I recorded a video in this past week's Trading Edge video, but then I deleted it because I just didn't feel great about it, and I wanted to keep the video short. I also want to explain this first before going into it, but I may dig into the charts and show you guys a few levels that I would look for from a technical perspective if I was interested in buying Bitcoin. So make sure you subscribe to the channel, that way you can check it out. I appreciate you guys joining me. Until next time, plan your trade, trade your plan. Akil, out.